A 67 years old market indicator predicts bull market across the world. S&P 500 index is officially at this point of time is in a bull market. Optimists should be smiling from year to year over this. There are number of financial metrics that suggest this time may be different, of course, for Wall Street. The directional movement of stocks has been correctly predicted by a bull market data set since 1956. The stock market is unstoppable when viewed from a wide angle. In the last several decades, it has outpaced bonds, gold, oil, housing, and certificate of deposits at banks and credit unions. Wall Street becomes unpredictable when you narrow your focus. It has been 2.5 years since the Dow Jones Industrial Average DJI at 0.56% and the broad-based S&P 500 GSPC at 0.93% and the growth-oriented Nasdaq Composite IXIC exploded to multiple all-time closing highs, then plunged into a bear market. After the Great Recession, the Dow, S&P 500 and Nasdaq have produced their worst full-year returns since 2022. Volatility and unpredictability of this nature repeatedly prompted investors to ask one question: when will it end? An established indicator indicates that the worst is behind us. There hasn't been a wrong prediction with this tool since 1956 for the stock market in terms of the market indication. The S&P 500 experienced a 282-day bear market from Jan 3, 2022 to October 12, 2022, during which the index declined by approximately 25%. Over the past 94 years, since the Great Depression began, this 282-day bear market has been more or less the average length of a bear market for the benchmark index. A much more interesting analysis is how the widely followed index performed once an official bull market was declared, rather than reminiscing about how much the S&P 500 declined during previous bear markets. S&P 500 bull markets began once the index bounces 20% of its bear market low. S&P 500 closing price of 4,293.93 on Thursday, that is June 8th, indicates that the market is no longer in a bear market. Please note once again, S&P's 500 closing price of 4,293.93 on Thursday, that is on June 8, 2023, indicates the market is no longer in a bear market as per the indicator tool that I have described earlier. So, the new bull market tends to have legs following steep or prolonged bear market declines. Each new bull market has been higher 1 year after it officially began over the past 67 years. It is also important to note that these are not just marginal gains. After rebounding 20% from bear market lows, the average bull market gained 28.2% in the 12-month period. In 6 out of 7 cases, every bull market was also higher at 6 months with double-digit gains. In recent weeks, number of highly persuasive data points and investment research noted that the benchmark index has closed the year with a positive return all 26 times since 1950 if it is higher by at least 7% on a year-to-date basis by the 100th day of trading. Since 100th trading session of this year, the S&P 500 has risen by at least 7% for 26 consecutive years. Assuming history repeats itself, data sets tell Wall Street and investors that stocks should once again be heading notably higher over the next 12 months. Data sets that have historically predicted bull markets always outperform financial metrics that haven't faltered in decades, perhaps even centuries. Over the next couple of months, maybe your guess is as good as mine. Over the past century, patience hasn't failed investors. The tool that predicted the bull market has never failed for the past 67 years. So, that apart, the tool that predicted the US markets also gives rise for a fair feeling across the world markets that once the Dow, S&P and Nasdaq starts rising and tend to go into a big bull run, then automatically we have all the indices across the world which will also follow these major indices, and we can see a overall bull run across the world. Hope the information is useful. Thank you very much for your patient hearing.